Well, hey everybody, welcome back. This is Dave. Today is Friday, June 12th. It's the end of the week, and we are going to take a quick look at the market, the Dow Jones Industrial Average to be exact. We have done a couple previous videos on this. The first one was, is coronavirus killing the market? Then I did an update at St. Patrick's Day, and here we are now kind of into the summertime, and we're seeing some market movement. So I've had a couple questions recently from some friends about this. I wanted to give a quick update and give you my thoughts on the market. So first off, to recap, you see that we have here on the left-hand side, this is 2009 crash. We had a significant run up, and in this circle here, we do see the two drops and some previous resistance points and some support points. If we move forward, we drew a trend line from the bottom of that last support up to the support most recently before the virus hit and before we hit 30,000 at the top on the Dow Jones. Let's zoom in and we'll take a look and see what we've done here. So you can see that early into the coronavirus, we had an initial drop, and that drop did come down, hit this trend line, and kind of take a little pause. It bounced off of it, and then it broke this 25,000 mark, and you can see where it dropped significantly into the 17.5 range all the way down here. The market found some support, and officially, it did not hit the 50% line. It was real close, but you can see we had a drop down here with a open and close across the 382 line, and then we had an open and close back moving forward on the 382 line, but no official break of the 382 line. That's why I'm saying, hey, we haven't really hit the 50% mark yet. The market has moved back up nicely. If you were with me back then, I did say I was going to buy in at 17.5, and I did when the market got down in this range, and I bought back in when it was nearing that 17.5 range. And so we took some profits back up here, and just last week it hit the bottom side of this trend line. So at around 25.5. A little early if you look at it right now, but around 25.5 I did close out, move back to cash, and settle into some profit, which was a nice little jump. But if we look at what's going on right now, the market hit this trend line, and like any support point, it will validate by retesting the bottom side. So this was previously support, this trend line. You can see here, and obviously the 2 points that we marked previously were support points. When it broke below it, that's a natural thing to do, and when it comes back up, it's going to retest it to solidify it or secure it as a new resistance point. You can see right now that these candles are weekly, and so last week's candle broke through, opened below, but closed above, and then this week's candle opened above and is trying to close below, I believe. And so what we're looking for is some validation. If this does, in fact, if this week's candle does stay below, what would we call this here, below 26,000, then I do believe that that's going to validate this trend line. We will see some consolidation over the next week or two, and the RSI, which is down at the very bottom here, in that consolidation period, the RSI would be rolling up towards the 80 mark. And once the RSI gets up to that 80 mark, we will see a drop back down. Now, we still have these significant points in the market here. You can see labeled with this green line at 25,000. We have a line at 20,800. And those are just previous support resistance points that we see in the market, very significant points. But my guess, complete guess, is that, again, we're going to form a little flag pattern here, some consolidation around this trend line. These stochastic lines, the moving averages, the red and blue lines, will need to cross and the RSI will need to get back up. And once those things happen, we get a cross in the top points, and this RSI starts to drop, we will see a move back down. Where do I think this market's going to go? If I can zoom back out here, I think that the market needs to come down to this 50% line. You see these Fibonacci's that are lit up here. The 50% line, again, right at 17.2 is a pretty significant point. If it breaks that, the 618's all the way down here in the 15,000 range. And I think 15,000 looks very compelling. We're at the beginning of an election year, and I think the crazy is only just begun. So that's my quick take on the market on the end of the Friday here, June 12th. That's my thoughts on where we're going to head. And I think right now you want to be risk averse. I think you don't want to buy in way up here at the top of the market. I think you want to get out, move your positions to cash, and secure your profits that you've got, and then wait until the market drops down some into this, into the 20,000, into the 17,000, into the 15,000s before we take some more aggressive positions and ride this thing back up. So I hope that this outlook has been helpful for you. Hey, I'd love to hear your questions. Put them in the comments below if you thought that this video was helpful, or if you didn't think it was helpful at all. Give me a thumbs up one way or another. Let me know that you have checked this out and what your thoughts are on the information. Thanks so much for watching. We'll check you in the next one. Peace.